It's Monday, March 15th, 2021. This is the first weekday since daylight savings time, and we had to spring forward in our clocks and lose an hour of sleep essentially, unless you went to bed an hour early, which I didn't do. And so I'm especially a little bit tired today and kind of noticed it around people I talk to, a little more grumpy, a little more tired, it seems like, than usual, a little more less motivated. Now, before we get into the markets today and the economy, quick note, daylight savings time is the practice of advancing clocks during warmer months so that darkness falls at a later clock time. Now, for up to me, I would just leave it alone. Do not change the time. Are we that afraid of the dark? Can we just use a flashlight? Oh no, it's dark at 5:30. I might have to use a flashlight. All right, so that's my little rant against daylight savings time. Let's talk about what's happening with this economy and where things may be headed. Let's first talk about the coming tax hikes. We'll take a look at a Post article here to begin with. Tax hikes on corporations, the wealthy, to pay for progressive programs.
Historic legislation is about rebuilding the backbone of this country and giving people in this nation, working people, middle class folks, people who built the country, a fighting chance.
Okay, so there you heard it. This is going to give working folks a fighting chance. Now, I'm sure many people, and maybe many of you listening, would agree that corporations, they should pay what's called their fair share, what some people call that. And if you look back over the past 4 years, it was pretty much a disaster where billionaires gained more wealth than at any 4-year period compared to any 4-year period in history. But yet somehow people said that that policy was for the people. And why do they say that? Well, they say that the more money you save corporations, then more people will get jobs, and then the higher the pay will be. Well, I wish that were true. I wish that if corporations saved money via taxes, that they would pass those savings along down to the worker. But for the most part, I'd say 99.999% of the time, that is just not true, right? There's such a thing called greed, and greed rules the game. So if you're a multimillionaire, you want to be a multi-billionaire, and so forth and so on. Did people like Warren Buffett quit investing after he made his first 100 million? No, he kept going and going and going. So we'll have to see. I mean, hiking taxes on corporations, will it cause jobs to leave the country even faster? Some people argue yes, that's definitely going to happen. And could it get much worse than all the jobs we saw lost over the past few decades that all went offshore for lower labor costs? So here's my guess. My guess is that it's going to cause jobs to leave America even faster, more outsourcing, cheaper labor costs. And this is going to be the first major tax hike in 30 years. So we'll see. It could go from bad to worse. Maybe we'll see 2 million people a week filing unemployment instead of between 700 and 800,000. But my guess is that no matter what happens, it's going to get a lot worse. This is not going to fix the underlying issue, which is the high cost of living. It continues to rise. No jobs or low paying jobs. Endless liquidity for the banks so they can keep pumping out loans, which further inflates the bubbles. Right, so this whole system, this economic system that we're running under right now, it is a huge, huge experiment in endless debt. And just when you think it can't get any crazier, we get further and further into debt, and the bubbles continue to get bigger. So it looks to me like this tax hike it'll make some people feel better when the corporations pay more taxes. What's going to happen? The corporations are going to leave America, the ones that haven't already left. And so you'll see more people dependent on handouts, pushes for bigger and bigger stimulus checks, more people marching to cancel rent and to put a stop on evictions, more people asking for free utilities and for loan and debt forgiveness. And it looks like the economy may go from disaster to devastation. We'll have to see how it plays out. But the markets love the stimulus. Take a look. All major indexes in the green today. Crude oil sold off a little bit, but still hovering above $65. Gas in some locations is pretty close to $4 here in Southern California. And the mania continues as people pour money into digital assets. And even a lot of the stimulus checks that are being sent out, a portion of these checks are going to go into digital assets. And it's a pretty good chunk. Let's take a look. A reporter here out of Yahoo Finance, Market Watch, and more, nearly 10% of the 380 billion in stimulus checks may be used to buy Bitcoin and stocks. So looks like the bubbles are going to continue to get bigger. And this is what happens. This is what people are motivated or incentivized to do when the dollar continually gets devalued and people know that the dollars sitting in your checking account are just going to lose value because why? The prices of everything is rising. So if you don't put your money to work, so to speak, to get into an asset that's also going to rise along with the general cost of living and rising prices, then you're going to get left behind, right? And these are the people that are really having the hardest time right now, non-investors. And it's sad because some of the people that aren't investing, that sitting behind a computer screen and investing here, investing there, are some of the hardest working people, right? The big chunk of America's working class are non-investors. Now, I'm not talking about somebody having a 401k through their job or something like that. I'm talking about active investors that they're not just sitting it and forgetting it or contributing a few dollars each paycheck to their retirement plan. I'm talking about active investors that are looking to trade or find an asset that's going to rise, buy the peaks, or sell the peaks, buy the dips, and so forth. And I saw the writing on the wall years ago, and I started being an active investor when I used to be pretty just complacent, sitting on the sidelines. So you have to ride the bull, and also you have to prepare for the bear because a bull market today is not guaranteed to last forever. It's not going to last forever. There's always a pullback, a correction. In this case, and it could be one of the biggest crashes we've ever seen if the stimulus is pulled back or some of the support for the banks is pulled back. Many people are not preparing for that. They're convinced somehow that there's going to be a endless bull market and endless inflation. So I would also still have some cash, even though it's getting devalued. I would still have a portion or a fraction of what you have in cash in case there is that correction, in case there is that pullback. Because if this stimulus is pulled away, it's going to be the biggest crash that the country has ever seen. And when it happens, if you're 100% invested in the markets and you have no cash on the side, you're going to be kicking yourself. Kind of like the people right now are kicking themselves for not getting into investments that are rising. Instead they're sitting in all cash, so they're kicking themselves that they didn't invest. See what I'm saying? So, but it's going to continue to get even more insane, and it's going to be very interesting watching these markets, watching these prices rise. And grab your popcorn and hold on tight because it's going to get even crazier than you can imagine. Thanks everybody for watching this report. Thanks for being here, for supporting this channel. Stay well, stay safe, stay prepared, everybody. Bye for now. Peace.